we've been in a lovely 12-month upcycle on the Nasdaq. Sucker blur. All right, let me tap into something that most people wouldn't really tap into. What do I call this? Right, the Nasdaq tends to open low in the January, consolidate for the quarter, and then goes into a bull run to December. All right, that's what we got last year. Open low in the January. Okay. Then it consolidated for the quarter, kept price within this range from this high and this low, kept it within there. January, February, March. All right. And then we got a bull run to December. This is typical of the Nasdaq over the past, let me check, what's this one here? All right, time frame 20-year range. This is a 20-year average of what each season, each year, the Nasdaq would do. Same as the S&P. All right, so let us get back into it. However, I'd like to draw your attention into this. Okay, this is the second leg of a big fat W, my V, my second V. What's the anticipation? An M. It usually consolidates January, February, March, right? Why am I thinking this? That's the only reason why I'm thinking that. What am I using to substantiate this? What am I using to find modern day reasoning in this? Okay. So I want to break it down for you. If this is level 3 and it started in here, therefore whatever high forms up in there is my I can't push it beyond that point. Therefore, away from that buy side, targeting the sell side, I am looking for a of what? Of drop. Market Makers Method, Steve Morrow. According to ICT now, I could just simply take Fibonacci and put it from here and place it up there at whatever swing high maximum is going to form up there. And I should find around here the midway. otherwise known as I'm not fond of keeping lipstick on the chart. I really am not. Alright? And I got that from Steve Maru. He says, the more experience you get with viewing what's on the charts and looking at it with a much more sinister mindset, you're going to be able to shed the bullshit off of the charts. What do I mean the bullshit? The indicators. I used to use TDI, moving averages, put it all on the charts, and all that crap. Bro, I've been there. I used to draw trend lines. Yeah, I used to draw trend lines. I used to draw trend lines like this. Let me show you. And the market would whoop the shit out of me, bro. It would whoop the goddamn silliness out of me. So I'm hoping that price is gonna go down to the $17,000 round number. That's a new high. Okay, let me do this. Do that. Right, okay. Oh, Control A. Wait, Control A. No, it doesn't work. Command A doesn't work. So $15,000 round number. What do I mean round number? It's just $17,000 flat. That's a new high. What am I speaking about that being a new high? Okay, this chart lacks data. Okay, what can I do about this? I think I've got a MetaTrader phone here. Let me check. Looks different, but then just want to show you something. Let's open the weekly. There it is. Okay, switch that off. I used to be able to take this down. I don't know. I don't remember how. Okay, this one is best at describing this. And let me get an object. That's the high. That's buy side liquidity. When price was coming down to this low, this was sell side liquidity. Let me show this to you. Right here. Okay. I'm taking the real closes of the candles, the real bodies of the candles. And I'm doing this deliberately. Okay, let me zoom out a little bit. There it is. Then I used to use this stuff here, TDI, just to look. So TDI is basically built on RSI. All right, we are currently in the sell area. RSI line is in buy side overbought. It's a retail technical trading tool, but we can use it to understand with our set of eyes what is happening in the markets. That's what's happening in the market. We're in here. We're in a form of, false perpetuation of price that makes everyone think that it's still long, it's still bullish. I don't remember how to drag this down. Right? So we are currently above that level, buy side liquidity. The next round number sitting above there is the 17,000 round number, and this is a new high. This is an all-time high on the Nasdaq. And to begin the month, they'll validate that high for those traders who don't know anybody. Let me show you the stuff. Who still think breakout trade. Oh my God, to the moon! Yo, man, those guys probably don't know anybody. Dare I say it, this is the move. Validates to the moon. Then it replaces that entire structure. I spoke about Fibonacci. It's going to be quicker. Just, okay, these are the cycles. Wait. Yeah, let me delete this one. I need Fibonacci retracements. What are these? These are cycles, okay. Retracement. I spoke about, go back in the video. I spoke about market maker fair valuation. Let me put up 17,000, and then I'm just gonna work hypothetically off of the 17,000 round number. Hypothetically speaking, ideally speaking, this is what I'm looking for, right? 17,000 round number, and I want you to look close at what's happening in here. We had a swing high, all right? Then later, price breaks that swing high with one big candle. So the price between the close of that bullish candle or up close candle and the open of that up close or bullish candle is imbalance. And yeah, it's an imbalance. In this case, I just want to change the properties, not delete the object, dude. Let me just speak, those are just the candles alone. Alright? Huddleston also speaks about the area beneath 50% Fibonacci as a discount, buying area, and the level above 50% Fibonacci as premium, which would be a selling area. So basically, if you were to take the Fibonacci and place it from that swing high to this swing low, we are still in the premium. It's above here. It's above 50% Fibonacci. There's no need for me to prove that to you. We are above this area. We're above this area here. The 50%. We are above here. We're trading in here. This is premium price. We sell premium price. The algorithm is more inclined to sell premium price. Alright? So, what is my anticipation? This is my personal anticipation. I'm not advising anyone to take it as their own. It's my study. Okay? It's not a signal in any way. It's just education. Use it. As that price will replace that premium area back into a discount before going long again. So this might be that January, February, March consolidation. Seasonality. And then we can get a bull run. President Donald Trump comes back, elections, whatever, late year, 2000. Let's check that out. November 5th, here, late 2024. Right? So speaking of which, that's a long time, and look at what would be happening on a seasonal perspective on the Nasdaq after the election. You already know that next year, during the late times of the year, you expect a bull run on the Nasdaq to close your year in a bull. Alright? So let's focus on what I'm speaking about here. So I'm expecting price to drop from January, February, March. And then thereafter, whatever happens, happens. But I'll be closely monitoring this markets for you. The Nasdaq. Alright? So easy. WVVM. ICT wise, we are trading above that midterm buy side liquidity. Okay, we had a run of that buy side liquidity, and we are drawing into a new high, an all-time high on the Nasdaq. This is where amateurs buy the Nasdaq. I want to make a long video on it. Right?